Hey, gang. Happy Friday, everybody. Should be good to go. Welcome to Charts and Coffee for Friday, December 11. Good to see everybody. Good morning. Good morning. Happy Friday. All right. Hope everyone had a good Thursday. Hope Thursday was kind to them. We actually did some kind of cool things in the futures room on Thursday. And one of them I actually wanted to bring up because it's just a little bit of a paradigm shift, but it's one that will actually benefit you, especially if you have a focus on indices. So let's jump into this. Let me show you here one of the things that we did. And this is something you can think about adding to your approach. And that is especially the 6A contract. This is something how many out there trade S&P, NASDAQ, Dow, Russell? How many of you take a look at some of those markets on a regular basis? Quite a few. And it doesn't have to be the futures. It could be the SPY, SPX, QQQs, etc. Just some variation of the indices. Yeah. So if you're watching the indices, one thing that I'll recommend, and this is one of the alerts that went out yesterday in the chat room, and this was to play the 6A. So 6A, FXA, this is a way you play the Australian dollar. And if we have some movement higher in the equity markets, not only is it really, really good to see Australian dollar confirmation, but this is one of the trades we just sort of piggybacked along for some of the morning. It was a really good little trade. If you take a look at the daily candle, that's the daily candle. We didn't get all of that, but we got a good chunk of it. And so, keep in mind related markets. It's a lot of what we do in the futures room, rather than just keep hammering away at the same few indices. And some folks like to specialize. I don't recommend it. Think about what's related. So that was one of the cool things we did yesterday. And I thought, you know what, let me let the group know, at Charts and Coffee, that there are related markets. And usually we'll think about index to stock or index sector stock, but sometimes there's some interesting plays on the currency side. All right. We have a few requests for gold. Sure. Now, a couple ways you can play gold, gang. It doesn't have to be on the daily. In fact, right now, I would sort of recommend leaving the daily alone. I would say that if you're going to do anything, and this is really up to you guys in the time frames that you're interested in. You notice with what I'm doing, with what I'm sharing with you all, with what I do in the futures room or the options room, or it's going to be a choice of a 1-minute chart or a daily chart. And that kind of very simple, I'm either intraday or I'm end of day approach makes life so much easier. You're not being pulled in so many directions to not only figure out what symbol you're going to trade, but also what time frame you're going to trade it. That's like picking a winning symbol twice, right? So right now, I would say, if I'm going to give you any kind of insight on gold, my insight is trade it intraday right now. Wait until the daily starts to get some structure again, and just be open to some days in gold. You may be, looking at weakness, and other days in gold, you might be looking at strength. As far as directional bias goes overall, though, in gold, I would say that I'm still minorly. I would say your path of least resistance is still, for the most part, slightly bullish at the moment. I'd probably be a little bullish today, but I'll tell you what, gang, straight up, I haven't been trading gold. And, as much as we talk about watch lists, I just did a class, and one of the topics we talked about throughout the class was trade a solid watch list, be more focused on what you're trading, not how you're trading it, and your trading results will be better. Case in point, did I persist in the indices yesterday, or did I think about, wow, this currency pair is doing really well, or this currency futures contract's doing well? Let me readjust my watch list to take advantage of something else. I know gold's in the headlines. I know gold is one of those really popularly traded charts, but right now, I would actually put it on my do not trade list, unless you're going to intraday trade it. And having a do not trade or do not watch list is probably as powerful as having a watch list, things that you're eliminating from contention. All right. So great to see everybody. So that's what I'm looking at right now. As far as the S&P, sure, you got an SPX butterfly. So path of least resistance for the equities markets are still up. Let me mention this though, gang. And I think this is something that, again, goes back to what time frame you want to trade. Give me 1 second here. It goes back to what time frame you want to trade. So let me just shove this back to yesterday here real quick. So I've talked about the 1 minute. Now notice most of the trading that I'm talking about with you all here in Charts and Coffee, most of the trading that I do as a day trader, the alerts that I share in the futures room are basically from here, 9:30. We start winding down around here, and then that's it. That's it. 120 minutes. In 120 minutes, what do? We took a trade in the NQ or QQQ calls. This isn't just about futures, gang. And we took a trade in the 6A. We went 2 for 2, right? Love that. 100% winners. And then you know what we did? I went and had lunch, right? So think about not persisting through the rest of the day. I'll tell you what, if you persisted through the rest of the day, golly, you got put in a mini chopper. You ever see those little mini choppers? You put onions in them and woo! Yeah, that's what happened. This isn't a spin cycle on the wash machine. That was just a mini chopper. That's ugly. That's ugly. And what I would encourage a lot of traders to do is maybe try being a one-sided trader, a directional bias, one-way trader, and focus on the first 120 minutes of the morning, and then determine if you want to trade the rest of the day. So, something to think about in terms of the way you're structuring your trading life, right? I mean, you do want a life. I haven't mastered that yet because there's so many other things that I like to do, but I'm not trading all day, gang. And so I think there's very much an inverse relationship between being a day trader or a trader in general and thinking more is better. It's not. It's not. And I think a lot of you probably know that more than anecdotally, right? Okay, so going back to that S&P, whether it's an SPX or SPY, for me, it's all emanating from that S&P contract. And, what's really interesting to me is we are pulling back. One of the things we kicked off this week's worth of Charts and Coffee was, hey, we are coming into that pit below. Did I think that perhaps we would see the lows hold Wednesday, Thursday? Yeah, but it really is a Wednesday, Thursday, Friday phenomenon going into Monday. Usually Thursday kind of caps it off. But we also have a narrative that I was sharing with you guys, 2 narratives that could disrupt this tendency of the pit below. One was we're still waiting on this stimulus package. And this stimulus package is going to be smaller than I think initially was talked about a month ago. That's going to be something that I think could be a buy the rumor, sell the news, gang, because unless this thing tops, to me, the number's going to be $1.25 to $1.5 trillion. This sub-trillion dollar thing, the market discounted that a month ago. The other issue is going to be, let's get past Monday. Let's get past this electoral college. Let's get this finality of the election. That could be a big cause as to why traders are thinking, I may not want to go long into the weekend. I'll build that position Monday afternoon. I'll build that position maybe Tuesday. So while I think the pit bull phenomena, the pit bull tendency will likely still lead us to some strength into options expiration Friday, next Friday, one of the things that we may see is that window of the low gets pushed to Monday. And that's something we touched on. And it looks like that's how it's forming. By the way, in the meanwhile, gang, let's not lose sight. Double green, right? Double green. What does that mean? This is what I call a double green. Both my labels are green, and it's the structure of four moving averages. 8 exponential moving average, 13 exponential moving average, 21 period exponential moving average, and then the 34. And so when they're organized in a certain way, those labels go green, that tells me the path of least resistance is still up. The higher probability trades overall is still up. And I've just got to wait to see if maybe this 21 could hold. I'm looking to get long, gang. Whatever this is, this electoral college concern, this when is the stimulus going to come concern, whatever this is, I think this is just a setup for what could be the end of year rally, because I do believe we're going to see an end of year rally. So this pullback, I think, is a gift. And this is something we're going to discuss a whole lot more. For those of you that are in the Sector Secrets Mastery with me, I'll see you guys at noon today in the chat room. And one of the things we've been talking about is just watch list building, right? The last time we spoke, we had a session on Thursday. We put a list of about 8 symbols together. I think that list is going to be even larger, but we're kind of waiting because the setups are coming to us, right? And you've got to sometimes be patient enough to say, look, there will be something to do. I will get my pitch. It just may not be right now. And I don't know if you guys can see it. It's kind of hard to see on the, probably on this, but on my giant bookshelf, yeah, you can kind of see it. It's in the very upper corner. I've got a baseball bat right there. You guys see that? That's actually a baseball bat. It's an unfinished, gorgeous wood bat. And I keep that there for a really specific reason. Number one, I think Moneyball when it comes to trade management and risk management. And number two, you've got to be a patient hitter at the plate. And I think that applies to us traders. You can't be swinging at everything. How many of you have been to little kids T-ball or where they first learn how to pitch and the coach is giving them this little easy underhand pitch from 5 feet away and they'll start swinging the bat before the ball's even thrown? You guys ever seen that? A lot of adults do that in the market, right? Be patient, gang. I think there's a really good trade. I think we just need to wait for the market to come to us. So be really, really, really cautious. Hey there, Bradley. Case in point, less is more. Absolutely. Hey, yeah, I saw you gave back. Here's the thing. You understood what you did. You still walked away plus, right? So you didn't let yourself go negative. Very good. And less is more. You got it. Hey, Bradley, you're what, into your second week now of being full-time? By the way, you are doing exceptionally well, my friend. And thank you for sharing that with the group, because I think a lot of people would think, oh gosh, yeah, I did get sucker punched at the open and I did overtrade. And golly, I'm the only one that ever did that. No, you have plenty of company, gang. And Bradley, thank you for sharing that. And when we make these smaller, they're just tactical errors. That's all they are. They're tactical errors. When you make them, just, I talk about writing and putting things in a journal all the time. And yeah, do it. Write it down and go, today, this is what I did. Take the snapshots. We talked about keeping, say, a photo journal instead of a written journal, if that's what you want to do. But thanks for sharing that, my friend. Yeah. All right. So next is, let's see, Carol. Oh, okay, the Fib Queen. Yeah, the Fib Queen. Does she have a whip? I've heard her joke about that. But yeah, I've got a bat. I love baseball. Loved it ever since I was a kid. I wanted to be a baseball player probably until the age of 9. All right, let's see. And if you haven't read Moneyball, I highly recommend. No, not the movie, which is feel good and great, but check out the book. And if you've already read the book, you think, Rog, that was great. Read MVP Machine. It's every bit as good. And think about being patient. In fact, one of my most popular recommendations for trading psychology for my baseball fans out there is written by H.A. Dorfman, who is really, to me, and a lot of people believe he's the father of sports psychology, which is what trading psychology borrows from heavily. He wrote a book called The Mental Keys to Hitting. And if you read that, a little bit of imagination, the application to trading, especially day trading, is unbelievably accurate. Okay, so how about a pit below 3620? I like where the 21 exponential moving average is sitting, which is about 3616. And remember, again, we're rolling over. I think we touched on this yesterday. We're rolling over. So we're going from that Z December contract to the H March contract. And so make sure you're on the right contract. If you're still day trading December, that's fine. There's still plenty of volume there. But longer term, which is what I'm talking about, please go out to March. And my friend, 30, that's a minor psychological level. So definitely Sun River Coatings, I'm with you. And my zone might be about 3-4 points within what you're talking about there. So we have a 36-20 minor psychological level, a 21 exponential underneath that. I'm with you there, my friend. I'm absolutely with you there. All right. So let's see. Yeah. T, I think there is some Bitcoin erosion in the dollar and in gold, but I don't think Bitcoin's quite mainstream enough to affect both those markets. But I agree with you. You can definitely see there's at very least a correlation. Is there causation? I'm not completely convinced, but I agree. To ignore the impact of Bitcoin, which is really a bet against certain financial institutions and ways. I'm with you. Is that part of the narrative? Yes. Is it the sole plot? No, but I agree with you, my friend. I think Bitcoin is part of the narrative. You got it. Do I take day trading setups and sector secrets? Income Alive, my sector secrets mastery is for folks who have about 45 minutes to an hour a day to look at end of day charts, mostly in the ETFs and stocks. And we're putting on options trades to take advantage of moves. Day trading I do in the simpler futures room. And again, my day trading window is from 9:30 to 11:30. And what I walked you guys through yesterday, that's exactly what we did yesterday. Just find a couple markets. It's like a really discerning batter finding their pitch, right? And then we recognize that pitch coming at us. We know what we need to do. And that's 2 hours in the morning. That's really it. It's the first 2 hours. So then after that, I head on over to my Sector Secrets Mastery Room and we start scanning. And right now, I'll tell you what, I am licking my chops as to the kind of setups we might have going into the end of this year and going into January. So these are more overnight approaches to the ETFs and stocks. So thanks for the question. I appreciate that. All right. Andrew says, I love the ETF masterclass. Been working pretty well for me. Very cool, Andrew. Hey, Andrew, last Sunday, I did send out my current watch list to those of you that took the live trading. And yeah, right now, Andrew, if you're looking at, so thanks for the shout out. If you're looking at the scans from the way in which we look for opportunities from that class, and you're looking at the way in which we're pulling back right now, you're probably seeing there's a lot of double green uptrends that are starting to look very, very tempting for us. So I think that a lot of what we're going to see going into late this month and early next year is going to be phenomenal for what you now know you can take advantage of, because I think people are getting entirely too bearish right now, forgetting that there are these two narratives that are fairly noteworthy. Again, waiting on stimulus and waiting on this electoral college vote to be cast and done. We could definitely see, I think, some nice moves going into next year. I'm not questioning that at all, because the central bank has not changed their policy or their approach. Janet Yellen, who was at the helm of the most glacial pace of rate hikes in the history of ever as a Secretary of Treasury. I know she's not the Fed chair, but again, we're going to have accommodative policy for a really long time. So I like the idea that the V bottom that we saw in the Federal Reserve's balance sheet when it was going down and then boom, it started shooting back up again last August. That's going to continue to keep this party going. How many of you watched the IPO for Dash yesterday? Look, gang, in markets where people don't have risk appetite, you don't see the Airbnb IPOs released. You don't see Dash. Golly. I mean, that, gang, we're still in a frothy market. So I'd like to take advantage of that, not in Dash, but in names that I think are a little bit more, we have a little bit more background, a little bit more data, a little bit more price action on. But I'm very optimistic going forward. Okay, next is, oh, by the way, I do want to mention, gang, one of the things that we have seen on the broader averages is that continued pullback. So one of the things that I am going to wait on is either that inside day or minor low. So I would also, as anxious as I am to get long, I'm going to be patient. All right. Because I think traders who are guessing at where the lows are so far, it's stung a little bit. So don't be so obsessed about finding the low and buying at the low. You don't get brownie points. I don't get brownie points for that. Okay. Next up is, do I ever try to time the bottom and play major reversals? So when you talk about bottoms, Corey, major reversals, as a general rule, no. But sometimes I do find that I will be in that zone because I think that's bottom picking, right? I mean, let's just call it what it is. And there's different ways to be tactical about it. I agree with you. So what I'm usually trying to do, and I'll give you an idea right here. This to me was very close to a major reversal right there at the bell. Very close. And if we got down a little bit lower than we did, we were waiting to get long. It just didn't get down low enough to sort of ring the bell to get us long. Another example, there were quite a few markets where yesterday I was looking for some significant lows on the open, and we just didn't get there, right? Or we got there before the bell. So yes and no. It's how are you determining that there is a low and a reversal? For me, it's going to be a combination of volume and volatility, right? Or, if you're looking for a particular pattern, those are there as well. But I'm looking to always be long from lower. So we're probably talking about somewhat the same thing. But, I don't know that something's a reversal. Nobody knows that something's a reversal until it's reversed and then it's followed through. So I guess yes and no, Corey, is my answer to that. It's really more, I think, a conversation about what kind of tools that I would use. And again, the tools that I would use to do that would be a combination of actually time, volume, and volatility. All right. Is it correct that I only trade the first 2 hours of the day? It is correct, Sudeep, that I day trade the first 2 hours a day. You're absolutely correct. That is my main focus. You got it. Let's see. And you'll notice, yes, TOS, TradeStation, they've switched to the H contract. Correct. Yes. And again, thanks for the reminder to everybody, Mike. Appreciate that. If you guys are interested in sector secrets, sure. It's a membership, gang. It's where I hang my hat for my options and my on ETFs and stocks, and you can get it over at simplertrading.com/sector, and that's the sector secrets mastery. All right. Next up is, let's see here. Yeah, is there going to be a lot of folks have asked me about a rollover gap. I'll look into that later next week between Wednesday and Friday. A2K Guru. Yeah. A2K. Yes. So I think it's, I'll look for that rollover gap Wednesday, Friday next week. And then A2K mentions, just reminding all that with the H contract being about 7 points below the Z contract, SPX is going to be about 8 to 10 points higher than the March S&P price. Yeah. So we're going to see some interesting action here. I think generally speaking, the market's still focused to the upside very much. Okay. Russell, I don't keep, oh gosh, I'm running way over. All right. We're going to wrap it up after this question. So Russell, I don't keep income goals. No, because all that's going to be contingent on the underlying structure of the market. If I'm in a double green environment, I'm going to have a different expectation for follow through and profits as opposed to if I'm in a yellow environment. So your environment's going to dictate what you're trading and how you're trading it, but it's also going to dictate what type of profits you can get. If a market's double green and it's going parabolic, then you have a completely different expectation for profit. So I don't believe in those because I can't make a determination on that until I get that underlying market trend. And then I go to myself, well, choppy markets, I'm going to see less profit. Double green markets, I'm going to see better follow through, possibly parabolic moves and more profit. So I don't believe in those. I do have limits on drawdowns as a percentage of my account. Absolutely. But I don't have profit goals. Okay. All right, gang, I've run way over. So let me let you guys go. I got to get to work. I know a lot of you guys are going to head on over to the Simpler Options or Simpler Futures room. I will see some of you all there later on today. As always, thank you for joining me for Charts and Coffee. I'll see you guys on Monday, 9 a.m. Be good to each other, gang. Have a great weekend. New Mandalorian drops today. I'll see you guys soon. Take care.